14 months ago, a small entertainment slash dining chain, Dave & Buster's, came public at $17 a share. Traded higher that day, and the stock really hasn't looked back ever since. Now at 41 bucks and change, up 158% from the IPO price. Sweet! Now, Dave & Buster's Entertainment, or Play, for all you home gamers, is a unique story. Across the country, the company has 79 venues that are part restaurant, part sports bar, and part gaming center, including everything from old-school arcade favorites like skee-ball or Pac-Man to the newest, most high-tech video games. I've said it before, and I'll say it again. Dave & Buster's is sort of a Chuck E. Cheese for grown-ups, and I think the terrific concept is a big part of the reason for the company's success. And make no mistake, Dave & Buster's is about as successful as it gets in the restaurant space right now. The company just reported its latest quarter on Tuesday after the close, and they shot the lights out with a 9-cent earnings beat off a 3-cent basis on higher-than-expected sales that increased by 17.9% year-over-year. Phenomenal 8.8% same-store sales growth. Best of all, Dave & Buster's raised its full-year forecast for 2015 and also issued strong guidance for 2016. But because the whole stock market was full of panic at the time, particular stock is only just now starting to get credit for that amazing quarter. And given the massive expansion opportunity here, I bet it has more room to run. Let's take a closer look with Steve King. He's the CEO of Dave & Buster's. Learn more about how his company's doing and where it is headed. Mr. King, welcome to Mad Money.
Thank you, Jim. Glad to be here.
All right, sir, I remember in the previous iteration, because I've been around for a while, Dave & Buster's was an uneven performer in the stock market, up and down. You were always very worried about it, even though I went there with my daughter and the one on the Philly Wharf constantly. What has changed about this iteration that your consistency and your average unit volume success are extraordinary?
So, Jim, we did a lot of things over the last 10 years, really, since we were taken private to make Dave & Buster's, you know, the most professional and best operating company that it could be. So I think there's a series of things that everywhere from implementing new systems, from kitchen display systems and labor management systems and all the rest of that, that's allowed us to be a lot more predictable than we were in our prior iteration as a public company.
I also wonder, there's a great phrase in one of your conference calls where you say that the country is riding a wave of popularity in gaming in our culture. That's also different from when the company went private, isn't it?
Yeah, I think so. I mean, I think you can't go anywhere in the U.S. right now and not see people playing games, whether you're on the Hertz bus, you're on an airplane, or you're at a D&B. People are willing to play games in front of other people, and I think that there's no stigma to it, or there's nothing that somebody won't try, and I think that, you know, accrues to our benefit in this case.
Now, also, I was surprised. I remember, look, my daughters were smaller. We would go, and really, I remember kind of it's like, you know, you got tickets and you're redeemed. It looks like you've got a great corporate business, and you make a lot of money on what is a very profitable thing, which is liquor. It's working for you.
Yeah, I would say 2/3 of our business is really very profitable amusements and alcoholic beverage sales. So, you know, in round numbers, amusements is about 52% of sales, got a very nice 86% gross margin. Alcoholic beverage sales, you know, right about a 20 or 75% margin, 25% cost. It's about 15% of overall sales, so combine those two, or 2/3 of the business. And both of those components have very low labor component associated with them. So, you know, on the game side, we have preventative maintenance, and, you know, we have people to, you know, cash you out in the winner's circle in what we call win now. Right. And, you know, you have bartenders for the alcoholic beverage part of the business, but that's much less labor intensive than what we see on the food side of our business.
No, that's a great point, because I know a lot of people are fleeing this group because of labor, and you've got the best numbers there. Now, you have a tie-in in some cities with the NFL. You'll do a pregame, postgame. That's got to be a terrific business.
Absolutely. I mean, one of the things that we've done over the last 5 years is really evolve the brand, and we've set out to do everything from food, beverage, amusements, improvements. But as we've spent about $65 million renovating our stores, really the hero of that renovation has been adding what we call Watch, which is really directed at watching sports out of home. And, you know, we're a very large venue. Our average square footage is about, you know, 40,000 square feet. we can have the 180-inch TVs and all the rest of that, which makes it a great venue for a live remote or something like that, which is what you're referring to in terms of having an NFL pregame show or one of the teams come in.
Now, 40,000 square feet, are there enough locations that it can be that big in many different cities that you still got that big runway to be able to expand?
Sure. I mean, we believe we have over 200 opportunities in the U.S. and Canada. We actually have 17 signed leases right now for 2016 and beyond. We're seeing a very nice flow in terms of the runway. We need about 750,000 people in 10 miles for it to be attractive for one of our large stores. But in our smaller stores, we can go into a market where we might have 550 or 600,000 people in a 10-mile radius, with it growing as you go out from that 10-mile radius.
Okay. The last question I want to ask you, and it's not up to you, but Oak Hill, which is a firm that I've done business with, and it's just fantastic, venture capital, they still own 24%. Their goal really is they have to have an exit strategy. They have to sell over time. Any sense after this quarter they say to you, listen, this is our chance, or will they just do it and it really has nothing to do with you? So maybe our viewers, if they want to buy some, they buy some now. Maybe Oak Hill comes to the market with some more stock?
Well, a couple of things. First of all, Oak Hill has been a great partner for us since 2010. I've really taken a long-term view, and I think that continues into their ownership as we become a public company. That, you know, their view is that they take the long view. They're not in this for a quick hit, and I think that they will be very disciplined and rational about the way that they dispose of their remaining 25% round numbers interest.
Oh, that's terrific. Well, anyway, it's an amazing turn from when it was first public, and I got to tell you, it's one exciting place to go to. That's Steve King, CEO of Dave & Buster's. Great to meet you, sir. Thank you so much.
Most fun you can have.
One of the better retail stories out there, guys. Don't have a lot of companies that have that mid to high single-digit same-store sales. Very, very few of them. Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.